Hi, I'm George Kasparis, the Regional Director for ShopperTrack, and I'm a proud member of the MECS+R.
Hi, I'm Jana Kattar. I'm the Leasing Manager of Le Mall, Lebanon, and I am also a member of MECS+R.
Hi, I'm Anand Kumar from Abra VM&SD, and I'm a successful member of MECS+R.
Hi, my name is Farah Ismail. I'm from Sahara Center. I work as a leasing executive and I am a member of MECS+R.
I'm Abhishek Srivastava, Mall Manager, Bahrain Mall.
Hi, my name is Hannah Al-Amro and I am coming from the King Abdullah Financial District and I am a proud member of the Middle East Council Shopping Centers.
Hello, my name is Hamad Hazim. I am a marketing manager at Mall of Delmonia from Bahrain.
Hi, I'm Hiyas Bayani. I'm from Colliers International MENA. I am a member of MECS+R.
Hi, my name is Mazen Macadam from Balbaid Real Estate.
Hi, my name is Kaisar Malik. I'm the Group General Manager of Razan Shopping Malls in Qatar, and I'm the member of MECS+R.
Becoming a member is very important. First of all, you get to learn a lot of new trends, what's going on in the industry, and in the meantime, you also get to network and meet a lot of people.
I found the MECS+R platform incredibly beneficial for networking and meeting people and like-minded people within the industry.
MECS+R gives an opportunity to explore, but also to get new insights on the market development, so we could work preventively on what and how to expect the changes in the market and the retail and the mall fields.
Well, MECS+R gives you a wide audience to reach out with your product or service.
Because it gets you access to high professional development and authorities.
Experience, community, family, and good image.
For people like us, it's a right forum where we can connect to the retailers which we needed.
Middle East Council gives you a lot of access to resources and information.
Becoming a member leads you to different opportunities. Knowing other people from the industry, it allows you to be a link to other retailers, shopping centers, which you can gain experience.
It also gives you a chance to share your ideas, get the new ideas, and also the new trends within the industry.
Very fundamental, and I really highly recommend for anyone in our industry, either from a development side or investment side or a property management side. There is a lot of insight, there is a lot of nice networking with the professional all over GCC and Middle East, and there is a lot of very high capable instructor that the team in the council are working to bring in and transferring the knowledge about our industry.
Great, thanks very much for the video, very engaging. Obviously, we're also very proud members of the organisation, and I'd love to get a headshot on that video. That was really good, and good to see all the work that you're doing for the industry and for the region. Right, we'll kick off. Today, we've got three of us on the call today. We've got myself, I'll do a quick intro in a minute. We've got Mark Tesseyman and David Macadam. And the goal today really is to have a fairly open, fluid conversation about not just COVID, about what's happened in the industry, how it's affected retailers and malls in the region. I think what we can do going forward, as opposed to just looking backward. I think we've got 200 plus people signed up for the webinar. I think we've got 107 online right now, which is fantastic. We've got people from all over the world, given sort of various versions of lockdown. I'm sure we're all working in weird and wonderful places. But with the wonderful thing that is Zoom, we can all get together and share ideas and share thoughts. As I said, it's an open, free-form conversation. I'd like to have comments and questions from the audience. We've got a chat channel going. You can just type your questions in, and if you feel brave enough, you can try and speak up. It's probably easier that we write them and we'll come to the Q&A at the end. We've already got a few questions coming, which is brilliant. So thank you everyone for that. So I'm going to switch the video off and switch on to some slides, and then we'll do the Q&A, the question session. Before we do that, just quick intros. So on the line, we've got Mark Tesseyman. I've known Mark for a number of years. If you want to know something about retail, he's the man, and not just the kind of glamorous front end, but actually how it really, really works. I've learned a hell of a lot from Mark, so hopefully today we can all learn something. Mark, do you want to do a quick intro?
Yep. Good afternoon, everybody. Nice to be with you this afternoon. I'm the CEO of Liwa Trading Enterprises. I've been with the business for 5 years now, and in the region for 12. So I think I've earned my spurs over the last few years here for sure. I think we've got a reasonable grasp of how the region performs, but obviously these are new times for us all. But yeah, let's see how this conversation goes.
Thank you, Mark. Great, thanks for the intro. And David, I've known a little bit less. We've met at a few events in the Middle East. I've probably grown more of a beard since then in lockdown, but I'm still here. David, tell us about yourself a little bit.
Very distinguished, Ben. Great look. I like that. Okay. I'm David Macadam. I'm the CEO of the Middle East Council of Shopping Centers and Retailers. Been in the region for 16 years or thereabouts. Had senior executive positions at Jones Lang LaSalle, executive VP at EMAR, Alpha Tame Group Real Estate before that. And I guess it's been the last 8 years now at Middle East Council of Shopping Centers and Retailers. Happy to be part of this webinar, and I'm looking forward to getting into it. So thank you. And I want to thank the team, by the way, for hosting this for us. They're doing such a capable job, and I'm quite pumped by the music that they're playing at the start. So back to you, Ben. Thanks.
Great, thank you, David, with the pump, David. Right, with no further ado, I'm going to jump into the slides. We're going to kick off actually with a little bit of a poll. So people get fingers on the buzzers. Can someone acknowledge they can see my screen, okay?
Clear for me.
Picture of a beautiful shopping centre. Okay, so we've introduced ourselves. I'm going to tell you a bit about myself very quickly. So my name is Ben Chesser. I'm the CEO and founder of a business called Coniq. I'm hoping that many of you have heard of Coniq, and if you haven't before this, you have now. I'm going to tell you a bit about us in a minute. My background is 15 plus years working for CRM and loyalty tech providers. So initially with big mobile phone operators, and then the last 10 years in the retail and increasingly the shopping mall space. So I'd like to think of myself as a bit of an expert in how technology can help loyalty and CRM programs for retailers. I'm based out of London. I was very frequently in the Middle East. We have an office based in Dubai, and very excited to grow our presence in that sector. In terms of what Coniq does, so I've only got one page, so bear with me. Coniq's been around for about 9 years. We are what's called a SaaS technology business. So primarily we provide technology focused on the shopping mall and retailer space. Our main area of expertise is in the mall space. So we're based out of London. We've got offices in US, across Europe, Middle East, and we provide two things really. One is a technology platform to enable malls and retailers to run loyalty programs, and by that we really mean engage with your consumers, understand who they are, build a dialogue with them, be able to talk to them one-to-one and really understand what their needs are. And behind that is a huge platform for understanding the data of your shopper base. So who are they, how often they come, what they buy, how much they spend, and all the wonderful things we can learn about customer behavior through data. And then we also have the kind of consulting and agency model where we can help businesses understand how they should use that technology and really get value from it. What we've learned over the years is technology on its own isn't worth very much. You need the people that can help your team understand how to use it. I guess our main clients that you'll recognize in the bottom right, we did a big project with Macadam, designing and helping them understand how they get value from their recently launched loyalty program. We work with Unibail and Amco, we work with Westfield across Europe, leading outlet shopping malls in the world. So huge amount of experience in the mall space, and then also with retailers like Starbucks and Liwa Group. What we have done since COVID really is really focus on how we bring the retailers and the shopping malls together. So we've been working with both parts of the industry over the years, and we understand now that that collaboration is critical. The retailers, kind of almost whether they like it or not, of having to embrace e-commerce and really understand how consumers can buy in the digital channels, but then also are those same people shopping the physical channels, and how often are they shopping? Are they spending more online or offline? And we see the mall as a key way of doing that. Access to data and customer behavior through the mall is key. So we've been really accelerating our product development in that space, helping retailers collaborate and cooperate with malls. And as an example, we're launching a product on November the 16th, which doesn't just track what you spend, but it physically tracks the movement of people. So we can see when someone enters a mall, how long they stay. We could even see if they go to competing malls. So see the physical movement of people as well as where they're shopping. So that's enough from me. I want to now get into the meat of the conversation. We've got a whole bunch of questions. We're going to go quite fast. We're trying to cover off really what's happened to the industry, and then what are the best players doing to adapt. I think it's all about now not just licking our wounds and feeling sorry for ourselves that there's challenges, but the sharp players are taking advantage of that and are adapting, changing business models and looking to the future. We're now going to do a quick poll, so to make sure that everyone is still awake and listening. We've got two questions for you. The first one should be extremely easy. So if Leah can put the poll up, we just want to find out roughly who we're talking to in the audience. Some of you may be from businesses that do multiple things. So you might be a retailer and a mall operator. Just answer where you think your main focus is, and that will help us understand the audience. You've got about 40 seconds left, I think, Leah, and then we should see the answers from that question. And if you're something else, you can't answer here what that is, but maybe you want to put it into the chat, or if you've got a question that relates to your specific part of the industry, then please tell us. Oh, wow, okay, so it's quite a split audience. Predominantly mall operators, so 39% mall operators. I'm very interested by this something else. We've got 19% retailers. I always really appreciate it when retailers join these kind of conversations, because I'm a firm believer that the mall industry and the retailers have to talk more. A few agencies, some tech providers. If there's anyone interested in something else, maybe investors, it'll be really interesting to hear what that is in the chat channel. So please let us know. Second question is slightly more challenging. The second question, we've listed out where we think that the main challenges might be. And if they're not here, then again, please add them to the chat. So question number 2, can we change the question, Leah? These are, what do we think the main challenges are facing your business right now? Is it a lack of insight into your customers? So some companies say that they're almost flying blind in the physical retail world. They don't really know who is shopping and how often and what their spend behavior is. Whereas online, they do know that. Is it about safeguarding? Is it still facing the physical challenges of keeping the stores open in a safe way where staff and shoppers feel safe and comfortable? Is it that e-commerce, whether it's pure play or whether it's retailers that are rapidly opening e-commerce businesses are taking market share? And we've even seen quite a few shopping malls opening up e-commerce businesses, so it'd be interesting to see if they're taking share. Is it that purely there's just not enough traffic in the malls, which we appreciate that might be the #1 problem for everybody, but if it's not, then please answer something else. This is quite a weird one, but is it that the tenant-landlord relationship is just wrong? It was built for a world that's very different to the world right now. Or is it that you don't have the skills you need in your organization or processes to run the business efficiently right now? We've seen lots of companies having to radically change their cost structure to adapt to the new world. It's probably not that surprising that the big challenge is low traffic in the malls. And I'm sure some malls are worse hit than others in that sense. And I'm sure David has got some good ideas here. Secondly, we're seeing organizational challenges. That's quite interesting, and probably not one that people thought about at the beginning of the COVID period, but we're seeing a lot of rapid changes within organizations, new skills being brought on board, businesses that have never really understood e-commerce very rapidly having to understand it, for example. It's interesting that losing market share to e-commerce is there, but it's not top of the list. And then customer insight, I'm glad to see that that's a challenge. And I think that's a tool that can really help companies respond quickly to changing environments. So on that note, I'm going to move on quickly, and we're going to just start the first question, the first conversation in the webinar. So very quickly, the headline, right, is why is the Middle East really well positioned to lead the revival, lead the retail revival? It's a bit of a bold statement, and I'm sure markets like China may disagree, but I want to discuss this and see what have we got that makes us specially positioned. So we picked out 4 things, and maybe these are not the right 4. Let's have a quick look. So one, I mean, historically, a lot of the economies have changed massively in the last 20 years. Very brave culture, a culture that really embraces change. I would say, in my experience, like no one else in the world. The ability of the Middle East businesses to have an idea, to think big and think fast is phenomenal. And I think that should be an advantage. Number 2 is it's a culture where the mall is still very important, or is very important. The malls are usually either community malls or city centre malls. They're not out of town malls. People go to the mall, as we all know, for their leisure as well as their retail needs. So I think the mall is really well positioned. Historically low internet penetration. It's growing definitely, and I'm sure COVID has done a lot to grow internet commerce penetration, sorry. But historically quite low, and I think a culture that doesn't necessarily embrace it that strongly. And then the last one, and this is probably the most controversial, I'm hoping to see a little bit of conversation here, is the business model is different in the Middle East. A lot of big groups are landlords and retailers, admittedly through franchise, but they're playing on kind of both sides of that conversation. I think that potentially could be a huge advantage in the sector, as well as potentially a risk. So on that note, let's throw over, kind of in the red corner, we've got David representing the mall industry, and in the blue corner, we've got Mark. And my job, I think, is to sit in the middle and try and stir things up. First, over to you, Mark. First of all, do you agree that these 4 differences are potential assets? And how do you think they can be leveraged? Or maybe there's something that we're not talking about here we should be talking about?
Yeah, I mean, I should have started off my piece with thanking you for finding me wearing a suit from about 1985 on your introductory slide, which is something I'll have to forgive you for another time.
You're young.
Yeah, you're very, very good. Well done for that. Yeah, I mean, I think if you think about the Middle East, it is quite unique. Like I said, I've been here for 12 years, and I was probably ill prepared when I first came here for how different the markets were. You do believe that the fundamentals of retailing are pretty much the same the world over. And I think they are from an infrastructural perspective, but this region just does behave very, very differently. I think the market is new, it's young, it's innovative, and it's pretty fearless, actually, in terms of many of the things that it tries to do. I mean, those of you that were looking, there was an EMEA webinar thing the other day, and the Khalifa Belhoul from the Dubai Future Foundation was saying that the region is famous for taking risks. And I think when you think about that in its context of taking risks, then I think there's no better place to be in the world for quantified risk, as I would call it. I think my chairman would have a heart attack in terms of us ploughing on with lots of very, very risky strategic initiatives, but we're certainly keen to try new things. In terms of embracing innovation, absolutely. I mean, in terms of trying to do something new and push the boundaries in whether it's own label developments or whether it's working in different model types with different franchise partners, those things are ingrained, I think, in the psyche of trying to do business. I think you can't get away from the importance of going to a mall here. It's different to anywhere else in the world, as you mentioned in your intro, in that culturally going shopping, socializing, eating out, and so on and so forth just sits at the heart there are lots of the social activities, and I don't think that's going to change. And we've actually seen that dynamic, wax and wane in the last few months with the lockdowns and people switching to e-commerce. But then we've seen a really big move back to the physical stores, and we've actually seen a decline in e-commerce business in the last couple of months, which is interesting. So we're seeing some record numbers in some of our brands, in physical stores in the last couple of months. So that's quite an interesting dynamic to witness. I think the final point about retailers being retailers and landlords entwined. Well, we don't always see eye to eye, that's for sure. And I think whether you've got a landlord being a retailer, whether that's a good thing, or a retailer being a landlord, and I think you see people on both sides of the coin. There are certainly economic, advantages in terms of doing that. I mean, my personal view is that specialism is always best. If you're an expert in your field, you should stick to what you're good at. And I think if you're a landlord and you're employing people to go and run your retail businesses, they've got to be experts. They've got to be good enough, to be able to leverage the dynamics of the individual brands and retail portfolio that you've got. But no doubt, I think whether the Middle East will be leading global change, I think because obviously I think our proportion of global retail is not massive by penetration. But I think in terms of innovative thought and being able to come up with a creative idea to prevail when all these challenges are complete, I think will be a good thing. I mean, one of our biggest challenges as a personal business, bringing things back home to me, is understanding whether we've got a business model that can withstand the wild variations and swings in consumer traffic and spending patterns at the moment. That's the biggest challenge that we're facing. Yeah. But I think it goes without saying.
Okay, we're going to come on to that business model question, because I think that's fundamental. I mean, across the whole global industry, but specific in the Middle East as well. David, what do you think? Are these four things that we can leverage? Are they the right things, or?
I'd say
number 4.
Sure. Let me tell you from my perspective on things. The region has never there's never a dull moment, and it's never failed to surprise me. So what I would suggest, a couple of things that haven't been mentioned yet, and the reason why the Middle East will lead the retail's global revival, and it goes back to the high GDP per person. If you look at the UAE, for instance, it ranges. I mean, there's a range, of course, but it's at the low of 43,000 per head to a high of 98,000 per head. If you look at Qatar, for instance, it's 68,800 per head up to 120,000 per head, depending on the part of the city you're looking at. If you're looking at Saudi, it's a massive swing, but it starts a little lower. And if you look at Kuwait, it's $34,000 to $120,000, depending on the corner of the city or what you're looking at. So there's a lot of money available that's sitting ready to be spent, invested, or otherwise. And I think it's for recreation. It could be for family. It could be for whatever. The other thing is in the last 6 months, everyone's been locked down or been restricted in their travel. So when you're restricted in travel and you still have the wherewithal to go shopping, and you're able to go out there and shop, we've seen some pretty good numbers particularly out of Kuwait and out of Qatar and out of certain areas of the UAE. So things are not as bad as one might look when you look at the underpinning GDP per person. So yes, it's under pressure. And I think that we'll see some things happen in the next little while. But I would also say that there's a lot of money to be invested still and shoppers to shop. The other thing is, I think we all know there's a great shopping infrastructure, and the families love to get together as a social initiative on a weekly basis to get together and get out. So one of the things that you've mentioned here, my last point, you said historically low internet commerce penetration,
yeah.
And it has been, but I think that has shown terrific resilience and also increasing the amount of commerce penetration that we've seen in the last 3 or 4 months. But I think also, as Mark has pointed out, we've seen a fall off of that once people can go back into the shopping environment. So that's what my thoughts are.
Yeah. Okay. And that e-commerce position is different to Europe, where we've seen that the baseline has been moved up massively. So yeah, it lifted up and it dropped down a little bit, but there's a seismic move in the baseline level of e-commerce. So I think in the Middle East that's been much less profound, which is quite interesting and encouraging, I think. Okay, we've got quite a lot to get through, so I'm gonna keep going. The next question talks about consumer habits, right? And this is slightly what you were talking about, David, just now. So obviously it's a region with huge GDP potential and a region that kind of likes to consume. So there's potential here. I agree that businesses can bounce back fast. This comes from Ernst & Young doing a survey. They identified 5 segments. And in yellow, we can see the Middle East and grey, the rest of the world. The interesting one is sort of top left. So the back with a bang segment are people that are saying, as soon as we can, we're going to get back in the stores and we're going to keep shopping. And we don't like the idea of not being able to consume, versus the bottom right, which is the keep cutting, where there's always a segment of the population that have to keep managing their spend, and they don't have the income that they used to have. So I think interesting that you see the sort of top left strong in the Middle East. Probably not that surprising, but very relevant for fashion and luxury brands. And then we also picked up some data from Pricewaterhouse. This is quite interesting, and I recommend you, if you've got a chance to read this this white paper they put out, it's very interesting, talking about how Middle East is different to the rest of the world in terms of retail. The big thing here is 58, 55, kind of 50, 60% of people are saying even now they prefer to shop in store than online. And I'm sure once lockdowns reduce and people will have more confidence in going into the malls, and that number will grow up and up. So compared to the rest of the world, we're seeing sort of 45, 47%. You've got nearly 60% in Abu Dhabi who are still, even now, more willing, more excited about shopping in store than online. So on that question, and I think this one's been kind of worked quite a lot already in the past, but it'd be interesting to take it on a slightly different angle. The obvious one is that the malls are less busy, consumer habits have changed. So David, what have the malls done, or what can they do in the future to try and stay relevant to the retailers?
Sure, and for me, it's pretty straightforward. It's you go back to Maslow's hierarchy, and the first thing, the number one concern is safety. So when the consumers and the customers feel that it's a safe environment that they can get into, then that they're going to feel better about coming into that location where they're going to be. So the shopping centers and the shopping center teams have to be sure that they're providing a very safe environment for all of the people that are coming. The second thing is that I think it's something that is a big change for some of the countries, but if you get right down to it, there should be, in my view, for the shopping centers, a real focus now on a specific market. And so for most of the shopping centers, I believe they should be narrowing down their area of focus to the community immediately surrounding that shopping center, whether or not it's a super regional shopping center in terms of scale, or if it's a smaller one. My sense is that you really, as a shopping center owner, you really have to be relevant to the immediate community that is surrounding your shopping and trading environment. So those are the things that I would start off the top of my head. Back to you, Ben.
Right, I mean, that's interesting, because pre-COVID, even within the Middle East, we were looking at the community malls saying that their position had changed and that it was less clear for them what their role was. As they know, as the mega malls were growing and experiential malls were growing. So you now think that's swung back the other way, that the community malls have got a strong position?
Well, let me say that it's a community mall, certainly, yes, but I would also say that even the super regional shopping centers have had to become more relevant to the immediate consumer base that is really in the trading environment. So the tourists are not there. You've got to figure out a plan B, and you've got to be able to be relevant to the immediate community that's surrounding you, whether it's, you know, if you're looking at it, if it's Dubai or Doha or Kuwait City, you got to find some little niche that you can focus on that makes your own shopping center quite unique for your shoppers and customers, with the safety as a first priority.
Right. So that's a really interesting point from Coniq's point of view. We've done a lot of tourism marketing, so a lot of our big clients were heavily dependent on Middle East or Chinese or Russian tourists, depending on where they were around the world. And then suddenly with COVID, that channel gets locked down, and we've had to redirect to say, how can we get more traffic from the local community? We've been amazed. We've seen average transaction values and spending levels going up on a per head basis by really targeting a local community. And we thought that that had been done, and there's a huge actually area opportunity to target them more. So I agree with you, that's important. And that changes the messaging, it changes who you talk to. Mark, from your point of view, I'd be interested to hear what you think about, are the malls doing enough to create a safe environment? But also really interested on the tourism aspect, because I would have thought, okay, people are traveling less, but then they're spending more in their home markets across the GCC. How's that played out for Liwa in terms of how you're seeing customer behavior changing?
Yeah, I mean, reiterate David and yourselves' point about where people are going. I think there's a couple of points here. Where they're going, what they're spending on, and how they're spending it. So I think we already know that there's 35% at least more GLA in the GCC region, more than the population requires. So I think there's always been a concern about what would happen to some of the, let's call them more secondary or tertiary malls. And I think because people have been shopping more locally, because they feel safer in doing so, I think those malls may well have seen an artificial bounce in terms of performance. So I think the question there is whether that's actually here to stay, whether that's here for the longer term, and whether it will last after the... Now, I think the smart mall operators that have done a great job on retaining the customers by making people feel safe, etc. I think there's a fair chance that it might stick, that people will continue to shop if they've got, a good offer and they feel safe, secure, and they've got an interesting environment in which to shop. I mean, we've seen a big change in our traffic by mall. So if you take Dubai and the Mall of the Emirates, for example, and the Dubai malls of the world, you've got traffic declines by brand from 25 to 50%. You go to other malls, you've got malls here in Abu Dhabi, for example, where you've got increases in traffic between 25 and 40%. So I think it'll be interesting one of our challenges, of course, is to work out what the hell's going on with that, because you've got to decide where you're sending your product and how fast you can get it there, and demand curves and so on and so forth. I think that's with us for a good few months yet, if not the next 12 to 18 months for sure. The second thing is how people have changed their behavior in terms of what they're spending it on. So we've seen a big decline in fashion trends, whether it be women's wear, women's fashion, people aren't going out and partying anymore, so they're not buying as many dresses, not buying as much in terms of special occasion outfit wear and stuff like that. Men's wear has been very slow because just men stop spending upon themselves. You'll know this. Your wife will have, probably told our wives will have told us to stop spending money on ourselves and spending money on the kids and so on and so forth. I think it's a given. But we've seen a big increase in home product. We've got 2 home vertical businesses that are doing remarkably well, and we're very, very pleased. So people are at home, they're looking at their 4 walls, they're deciding to change the decor, they're deciding to cook, make cakes, get fatter, all that kind of stuff. It's all going on from that perspective. And then we've also seen commodity businesses actually doing okay, because people, commodity is a bit of a safer haven in terms of what people are spending on. We've got lingerie businesses that are doing particularly well as well. And the method of transacting is also an interesting one for us. We're actually seeing less cash being spent. And I think that's people are feeling poorer of pocket. People are concerned about whether they're going to have their jobs, whether they're going to be protected in the short to medium term. So there's been less cash being spent, more on credit cards. And again, I think that's just a bit of protectionism from everybody, I think. So there's a bit of a concern, I think, in terms of general people's mindsets. But I've never seen, trend shifts like this for very, very many years. But it's quite fascinating to try and keep your finger on the pulse of the movement.
Yeah, I think interesting you see lingerie as a commodity in there, but I get it. We've also seen, we looked at the top 10 brands always shopped in the malls that we work in. We're always kind of tracking where's the physical traffic and then where's the spend going. And we've gone from having pre-COVID 1 homeware brand in the top 10 to having 4. As you said, people are they're shopping for their homes, where they're spending all day staring at the walls, and they're shopping for their kitchens. Brilliant, thank you, Mark. I want to come on to the next question because I think it blends in nicely. So one thing we can superficially say, okay, the mixture of where people spend money has changed. They're shopping more locally, so maybe retailers are looking at having stores in more community malls, or they're changing the size of the footprint in the mall. The marketing should change. The segmentation that you have in your database should change to reflect that it's different customers. I think underneath that, more fundamentally, is businesses have to just get more flexible. The speed of change has been something that we've never seen before. And the businesses that can adapt quickly do well, and the businesses that can't adapt quickly do less well, right? So all the things you said, Mark and David, a lot of them, they all require businesses to adapt. So one of the big things that we've seen is the business model historically on a kind of square footage rent model is assuming that the malls are always busy and that you kind of have to have a store just to be relevant. But that's changed, right? The malls, the traffic's moved to different malls. Sometimes they're locked down, so they're absolutely empty. David, how do you think the business model could adapt to be more flexible? The whole industry basically has to become more flexible, ability to change quicker. How can the business model change there?
Well, you're right, Ben. It's time for a sort of a pivot. And what'll happen, in my view, you look back at the U.S. as an initial model, and there's Simon Group, which is the largest shopping center group owner in the world, and they're now buying up some of their struggling retailers. For instance, some of these menswear shops, Brooks Brothers is one example, and others, they've bought them up because they understand that without these retailers, it's survival, that they won't have much to offer. And I think that that's a very wise move for them to do, because at the end of the day, what they're going to need is something that is going to be some kind of an offering, which is going to be impressive enough that they can move ahead with it. So my sense of it is that the business model is under change. I think the COVID has accelerated all of these changes. My guess is in this region, we will see perhaps an acceleration where some of the stronger brands that are perhaps offshore in other places in the world may have a chance to land in the Middle East once again, and have maybe a warmer welcome than they have in the past. I remember, you spoke of all of the Emirates and Dubai Mall, and I remember that there was a long lineup of retailers who are trying to get in the door to open. And I think that we'll see a number of these retailers that maybe haven't made it to the region yet that will come into the region. And I think we'll see perhaps an expansion of some brands that we haven't seen before. And I think that that's going to be very healthy for all the retailers and for all the shopping centers. So there are some good things coming, but I think I could also say, and I think everyone in the industry knows it, that it's very painful to go through this period of time, because the way it was isn't working anymore, and there's got to be some kind of a change. And as you've said in some of the conversations we've had, Ben, that the franchise model is now kind of risky for a lot of retailers. And there's got to be perhaps a better way to map and grow forward with how these things are going to work for these retailers and the franchise owners, which is the predominant way of doing business. So there's a number of things at play. I don't think that we've come to the new end yet. I don't think there's ever an end with retail, by the way. It's change and it's evolving, and that's just the nature of the beast.
So thank you, David. I want to try now zoom in. I'm going to turn to you, Mark, in a second. Try and make this a bit more practical. Like, okay, so what should they actually do? Because we understand the problem. So for example, and I definitely can't say who, but we work with 2,400 retailers around the world. In some malls, they are actually paid to be there. So because they're anchors, they bring traffic, and we all know that having a busy mall is a key thing. Do you think, David, that the actual leasing model could change? Maybe not paying the retailers, but or maybe paying the retailers if you need them to be there.
Well, paying the retailers is that's a bit of a well, who knows, right? It's always an evolving industry, and retail is always just that way. My guess is that there will become more of a relationship and a partnership between the retailers and the shopping center owners going forward, because they both are reliant on each other. And I think that as long as everyone understands that there's that reliance, that is very important, and it's global, by the way. It's not just in the Middle East. It's right around the world. You need to have great retailers, and the retailers need to have great places to open their businesses. But the most important thing now is to make sure that everyone survives through this period, however long that is, and are able to come out at the other end, but having a partnership so that they are strong enough to carry on and do more with what they're doing, and expand their footprint or decrease, whatever it is, look at alternate ways for bringing things forward. Go ahead.
Okay. Now, thank you, David. Yeah, turn to Mark, maybe something specific. I know your business model has changed quite a lot. It'd be interesting to hear about that, Mark.
Yes, drastically. So if anyone asked me at the end of this year whether or not 2020 has been a good year, then I would say it's actually been a very good year in certain elements. So, for example, it's forced us and made us focus and look within our business rather than look outwardly and just look for someone to. You can't blame COVID for everything, you know, because you've got to. Where you were, you can't. Nothing can be average anymore. You can't be average. You've got to be on your game, I think, to survive in these days. So, I think it's been our best year for innovative thinking. It's probably been our best year for speed of decision making. We operate quite a flat structure here, which is great because it means there's little red tape. It's been our best year for identifying issues with the business model in terms of the model itself, product, process, tech, people, you know, all of those things have been very relevant for us. I think with the business model ourselves, I mean, we've been historically a franchise-based model. We see the flaws in franchising, and go back to David's point about, you know, malls being, you know, having brands. Historically in the region, a lot of the malls that have had brands, they've been franchises. The problem with the franchise model is that there's just not enough margin to go around anymore. It's a bit, you've got to pay everybody. You've got to pay the franchisor, you've got to pay the landlord, you've got to try and pay yourself. And when price is becoming more of an issue, then, you know, you expect the consumer to pay. I mean, nobody's mentioned the consumer yet, really, in terms of what we've been talking about there. You know, the consumer should be at the center of everything that we do. So what we've been trying to do is think about how you make the consumer centric, and then looking at our business model and say, well, what do we need to do differently? Some of that was the work that you've done with yourselves. Ben, you know, I've worked with loyalty schemes for a long, long time. We've put that in place. We're definitely looking at the vertical models. You know, so we want to do more vertical businesses. This is the good thing about the region in terms of being able to be innovative and try new different things, but with a degree of caution. So our business model in terms of, we'll be changing the mix on the reliance on franchise businesses to look at more vertical opportunities, because there's more margin, there's more profitability to be had down that route without question.
Cool, thank you. I think it's interesting. I mean, the bit I've kind of learned recently is the understanding that the franchise model kind of has to change, and if you don't control your supply chain during a time like COVID, you've got a major problem. And I think that, as we all know, that feeds through all the way to the landlords and or even businesses like my own. You know, if the fundamentals of the industry are being attacked and are not working anymore, you have to adapt. Otherwise, we're all going to suffer in the long term.
I think if you're sorry, I was just going to say, if you're in a franchise model, then your host brand gets the cold, then you get a flu. You know, you get the sharp end. You know, and you're not in control. So it's a very uncomfortable place to be, actually.
Yeah, agreed. Okay, moving on. Thank you for time. I want to try and bring the conversation a little bit into what should we actually be doing? And I always try and kind of come down from the clouds and say, right, what if I'm sitting there in the audience listening and I'm the marketing director of a franchise retail group, what should I do on Monday next week, or sorry, Sunday next week that's different to help me in the future? So I think we've talked a bit about how they respond. I want to kind of go on to the next question, which is the role of data in all of this. It's a slightly self-serving question, but we've seen in the work we've done with you, Mark, but also lots of other clients, a really, really rapid desire to understand who the shoppers are, particularly in businesses where you're suddenly wanting to try and communicate with them digitally and even start e-commerce businesses. You need an audience and you need to know who's shopping in your stores to do that. So we've seen a big change from industry in their desire for data. I also think I want to pick up on a point you said, Mark, on the speed of decision making. I mean, I fully agree. Good businesses are taking decisions in weeks now that they used to spend years thinking about. And I think that's a key success factor going forward, is the ability to understand the situation, to get the data that you can to understand what the future looks like, and then to take rapid decisions. So let's go first to you, Mark. Let's look at loyalty. I'm just going to share a few bits of data, sorry, before I do that. So one is from Pricewaterhouse. There's a part of this huge survey. They interviewed 19,000 people, and I think about 1,400 about how their perception of retail has changed during COVID. And this question interested me of what can the retailers do differently? How can they improve the in-store experience? And most of these things are blending digital with physical. So it's taking things that we do digitally and bringing them into a physical world. And the number one thing they raised was personalized offers and personalized communications. In this example, when they go in the store, but it could be any time. So I think people want us as businesses to start understanding their data and using it better. I think it's quite annoying if companies collect data about me and then don't use it. And then Mark, I'm going to hand over to you. This is some data coming from the program that you're running. But we're seeing that members of programs, we can communicate with them more accurately. We understand their shopping behavior, and we can use that to drive spend. So turning to you, Mark, what has been the role of the loyalty program in the COVID period for you, and how do you see it playing out in the future?
Yeah, I think it's absolutely essential. I mean, we have a strong operational push within the business to sign up new members each week to our loyalty programs and schemes, and we incentivize people to do that as an initial one-off. Loyalty programs, and I've run them for the best part of 30 years, and they're evolving all the time because of the mediums now available to everybody in terms of social media, institutional media, and so on and so forth. But loyalty programs are like a leaking bucket. You know, people will drop away out of loyalty programs, so you need to keep the bucket filled up with, with new members. And the customer acquisition is at the core of everything, right? It's critical. You've got to get customer acquisition on the rise to get the leverage out of loyalty schemes. So our CRM has worked really, really well for us during the COVID period. We're seeing fewer customers, but these numbers are real on the screen in terms of our average transaction values being significantly up 22%, customer spend being up 26%. Spend per visit up 26, transactions and so on and so forth up 20 as well. So all good. You know, if a metric is down by 30 or 40% in terms of traffic, then these numbers help you bridge the gap ultimately. So we've got one of our brands where at the moment over 55% of our sales come from the database alone, come from loyalty, come from people that we talk to, come from engagement on a regular basis. Years ago, it used to be via, post and things like that. Nowadays, it's all digital in the main. Combinations of media, SMS, and digital communication. But it helps us learn more about our consumers. We're now starting to map the consumer behavior between each of our brands and whether they're connected. That's helping us to target some, individual marketing campaigns that encourage people to transact in multiple brands, not just the one that they're in. That's helped these numbers, I think, in part because people understand. I think there's another point here where businesses like ourselves have multiple brands. There's generally there's lots of bigger business here that market their umbrella group, if you like. So they'll, whether it be Liwa, they'll market Liwa because we've got multiple brands. We don't do that, and we will never do that. We will only ever market the brands themselves because we think the loyalty is to the brand, it's not to the holding company. So that's just a different mindset. But I think loyalty for us is definitely here to stay. It's got a bigger role to play in the future. I see it as being centric to helping us shape our buying behaviors, our marketing behaviors, our markdown behaviors, and so on and so forth. So it's really at the core of what we do.
Thank you, Mark. I couldn't have asked for a better answer, but very interesting. And I do agree you guys have used the data phenomenally well, not just for marketing, but to understand the economics of the business, and you said things like markdown margins. Turning, David, to you, it's slightly different, right? In a mall, it's a bit harder because you're typically not selling your own product, and yet most of the malls, the big mall groups in the Middle East have got some form of loyalty program, some better than others. What role do you think they've had, and how could they, let's think about more, how could they be improved in the future to really serve the tenants better?
Well, first of all, I think that all business is driven by the strength of the relationship that you have between the two parties, between the customer and, in this case, the shopping centers and the shopping center team. So whatever that shopping center has built in terms of that relationship and to create that loyalty that you have to earn, that is where it's all about. But I think, as I said earlier, it has to come back to the community that you're serving, and how are you serving, and are you giving them the service that they are looking for? So it's very true. loyalty programs create more sales from the loyal customers, and you get a higher spend per visit from your loyal customers. So the shopping center owners who know this and understand this and who can work with the data that comes in and the connection with them, I think they do better, much better. Now, having said that, in the first part of this year, when there was complete lockdown and the shopping centers were closed, I think that there was a lot of issues in terms of how do we get back, how do we start? And I know our organization was helpful for a lot of shopping center owners to try and really help them establish what it's like to build a relationship with their customer base, and also help them, going back to that safety issue, to make sure that there was a safe environment there to go back to. So yes, it's different. It's much different than the loyalty perhaps from some of the individual brands, but a shopping center is and should be a brand as well. And it should be really worked hard to build that relationship and to build that loyalty that you have to earn.
Brilliant, thank you, David. And I think that the answers are in line, right? If the retailers find that data critical to their performance, one thing we always sort of observe is that any particular retailer, you're going to get 4 or 5% of the people coming into a mall coming into your specific store. What about the other 95%? And I think the mall can help with that understanding. So the mall can help retailers understand all the people that are not shopping their brand, but that could shop their brand, which is really interesting. And one initiative we've been doing since COVID in Europe, which we could look to bring into the Middle East, is retailers sharing with us their e-commerce data and us mapping that onto our understanding of a mall to say, okay, what percentage of people that shop your online business are also shopping your store in that mall? Are they spending more online than in store? Are they going to other competing brands when they go into the mall, not just theirs? So to give them a picture of how people shop both channels, really interesting. Okay, we've only got about 5 minutes left, so I want to just jump to the kind of the last question. Let's have kind of short, pithy answer to this one, and then we'll just do quick Q&A. So this is really what's going to separate the winners from the losers in the future. I'm sure Mark and David have both got strong opinions. Let's go first to you, Mark. What's going to separate the guys that you think are going to be the mid to long-term winners versus the people that are going to struggle?
I think it's very simple. I think we already talked about speed of action and clarity of thought and clarity of focus. I think if you haven't got any of those things and you're procrastinating, I've been at a review with our teams this morning on some product reviews for next year, and procrastination is not an option. You know, you've got to be incisive and you've got to take some quantified risks. And I think provided you keep it very basic, if you're keeping your close to knowing your costs with the difficulties that everybody's got, and you're still trying to innovate and push forward. I mean, David mentioned before that retailing is ever changing. It is very much. It's one of the most exciting industries that you can possibly be part of from that perspective, because change is at the core of the whole industry. Then if you change and you innovate and you push forward, then you'll be on the winning side come the end of this general crisis. I'm absolutely sure of it.
Thank you, Mark. So it's about use your data, take decisions quickly, and change quickly.
No brainer.
Thank you. David, anything to add to that, or different point of view?
Yeah, sure. No, it's much the same. I think in business, you're either in or you're out. There's no middle ground. There's no, let's think about this too long, because I think if you dither, then you're falling backwards. And if you're not progressing, then you are going backwards. I was reading today, Bed Bath & Beyond, for instance, is investing $1.5 billion in the next year to expand their footprint. They've decided they're going to go for it. Now, I'm sure that they've been well taken care of with people buying some of their products online and also in their shops. But I think it's very gutsy on their part to say, okay, let's invest another $1.5 billion and expand. This is our time. I think that's what we're going to see from the strong retailers going forward.
Thank you. I'll throw my 2 pennies in at the end. I fully agree, and I think there's people like Simon taking pretty brave decisions to take advantage of the situation. I also would say, I think we've seen businesses that are they're obsessed with the next 3 months, hitting target the next 3 months, and they're not looking about 6, 12, 18, 24. And I think we've all got to realize this is not a short-term thing. We need to be thinking the change is going to be there forever. So not as it is, but it's going to be a change. So what does the next 2 or 3 years look like? Not the next 2 or 3 months. I've got 2 quick questions I'm going to raise up. One is, there's quite a lot of talk of tourism. So people saying that GCC, which a lot of the tourist dollar, and yet these people are still in regions, so they're still shopping somewhere. Mark, have you seen that within your estate, and have you changed your marketing at all to adapt to that?
I missed the start of that very slightly, Ben, but I think I picked it up. Yeah, the tourism dollar is not here in a different way. So we have changed our marketing strategy, and we've actually been utilizing our data a little bit more for that, because from our perspective, if the piece of the pie is only 80% of it was what it was before, I want a bigger proportion of the 80%. Yeah. So, you know, we've got a market, it's about market share for us now. So if somebody's shopping in our lingerie brand, then we want to make sure we've got a bigger proportion of that than them going to somebody else's lingerie brand. So we've got to have a very, you know, sharp, incisive view about the trading side of things to make sure you're getting that market share. If the tourism dollar isn't there, you've got to get it from somewhere else.
Perfect, thank you very much. And I agree, in a growing market, it's easier. In a constrained market, it's about fighting for share. Fantastic. David, one for you. It's can people or businesses across the GCC form an alliance to attract footfall, e.g. retailers and landlords working together?
Well, yeah, I think that the COVID has certainly accelerated this whole notion. I see a lot greater interaction and warmer relations, I should say, between the retailers and the shopping center owners. So I would say that if there's been a benefit of the COVID and what's happened, I think that the relationship between the two parties has become much closer because they are reliant upon each other. And I know that they've always recognized that they're reliant on each other, but now their very survival really is dependent upon how much of a relationship they have together. And I think we'll see that even more going forward the rest of this year. Brilliant.
I think that's it. We've got 15 more questions in the Q&A, but we're going to take them offline and we will respond to all of you individually. So thanks very much for the questions. Been a really interesting session for me. Any parting comments from Mark or David?
Well, Ben, just thanks for having us on here. I really appreciate it. It's always great to debate these issues and to see what's going on and talk about what we see in the market today and what we see going forward. So it's been very helpful for me as well. So thank you for that.
Thank you for that. Mark,
yeah, I reiterate those comments. I mean, I think on this working between landlords and retailers, I think transparency is key. You know, you've got to be able to be open and honest to actually get some sort of agreement. I think there's better working. I think it could still be a lot better. There's still missed opportunities. I mean, we were talking about the, you know, the data being shared and loyalty schemes between malls and retailers. And ultimately, you know, there's a missed opportunity there because why do they have to be so separate? They very much are, but they don't have to be. You know, there's a huge opportunity between sharing some good principles and practices.
Brilliant. Thank you, David. Thank you, Mark. From Coniq's point of view, it's been really interesting. We are also investing heavily in the region. We're growing. We're hiring people right now in the region. If any of you are listening and you're interested, have a look at our job ads. But we're extremely keen to be part of this story going forward, and very excited to be part of that glue that joins the retailers and landlords together. Thanks very much to the Middle East Council of Shopping Centres for helping arrange the webinar and the whole team that has been brought to the table to get that in place. Thanks, everybody. Have a great afternoon.